Our first moderator today is Mr. Emmanuel Mumba, who is moderating a panel on tax incentives and their impact on growth. Emmanuel Mumba is the acting Chief Executive Officer of the Zambia Chamber of Commerce and Industry, Zambia's premier private sector association. He leads the Chamber's mandate of shaping policies that drive private sector competitiveness and inclusive economic growth. An economist by training, he has developed a strong profile in taxation, trade and investment policy, with a particular focus on the nexus between fiscal incentives and sustainable development. He has contributed expert analysis on economic policy across multiple platforms, including parliamentary committees, national reform processes, regional trade negotiations, and international business forums. His research and advocacy on policy shifts aimed at strengthening Zambia's economic resilience. His research and advocacy on informality, tax administration, and investment client reforms have influenced key policy shifts aimed at strengthening Zambia's economic resilience. Emmanuel continues to bridge dialogue between business, government, and international partners, championing solutions that advance Zambia's economic agenda. We are grateful to have you here with us, Mr. Mumba. Please come through and lead us through your panel on tax incentives and their impact on growth.
Good morning, once more. Just to kickstart the conversation, I think I'll just just under 1 minute, just a brief introduction where we're coming from and some of the activities that we do in the space that we are discussing today.
My name is Petronella Ndimbwa. I am Assistant Director for Investment Promotion at the Zambia Development Agency. So essentially, the Zambia Development Agency is a statutory body of the government of the Republic of Zambia. It's under the Ministry of Commerce, Trade and Industry, but currently in a transition. We will be reporting to the Office of the President in the near future. And what we are basically set up to do is to promote and facilitate trade and investment, and also to provide business development services, and also to support research and information, market research, market intelligence for the Zambian business community. And what we are popular for is tax incentives, which we offer to investors and exporters as they operate in the Zambian market. Thank you.
Good morning, everyone. My name is Joseph Phiri. I'm an economist. Currently, I work at the Zambia Institute for Policy Analysis as the head of macroeconomics, and I also do lecturing at Cavendish University, and I'm also an academic editor for Plus One journals. So basically, I think in this theme, I think it's quite fascinating for me because issues to do with tax, growth, the economy in general are some of the areas that are of my thematic interest, and so it's very great to be here.
Good morning, everybody. I'm Kenneth Munyandi. I'm a tax consultant. I run a firm called MiTAX. Beyond that, I've been a tax researcher and advisor for a few countries and tax authorities. As regards this area of tax incentives, I've done consultants work previously for the OECD and also for Zambia and the Ministry of Finance and GIZ. Thank you.
Good morning, everyone. My name is Castagrand Nondo, coming from the Ministry of Finance and National Planning. I work under Budget Office, and where I participate in the formulation of tax policy, that is income tax, customs and excise policy, as well as value-added tax. I've been working with the Treasury for the last 7 years, but I also worked as a researcher looking at taxation. I think that's background in brief.
Thank you so much. Allow me to kickstart our discussion by elaborating that in this global competitive world, one of the measures that government uses really to attract investment is through tax incentives, and also overall just to lower the cost of doing business. So from the ZDA's perspective, I think you highlighted that one of the issues that you are well known for is provision of tax incentives. So maybe you can just provide us with some of the incentives that you provide under the ZDA Act, and also how are people eligible to really access those incentives?
Okay, thank you very much for that question. So I think as you mentioned in the introduction, we have the budget hearing later on. So that's one of the key things to look out for. What are the new incentives that are going to be on offer starting January next year? So right now, what is prevailing on the ground, generally offered to everybody who has a ZDA certificate of registration, is accelerated depreciation over a period of 5 years, as well as income tax that you will get if you are in manufacturing. We also offer non-fiscal incentives as ZDA. So this helps you to get secondary licensing, which will help you to operate and as you're setting up your business. So in order for you to access these incentives, you need to get this certificate of registration with the Zambia Development Agency. And as a Zambian, you are entitled to get it if you invest an amount of, a minimum amount of $50,000. And if you partner with a foreign investor, if you invest a minimum amount of $100,000, you will be eligible for these incentives as long as you have more than 50% of the shareholding. If you invest an amount of $150,000, you will need to have a partnership or a shareholding of between 25% and 50%. If you are holding less than 25% of the shares, or at least 5% of the shares, you will be expected to put in at least $500,000. Other than that, if you're 100% non-Zambian, you'll be expected to invest at least $1 million. So now, if you're in a multi-facility economic zone, for you to be able to be eligible for the income tax exemption that you would be getting for investing in one of the priority sectors, you would have to be producing for the export market. So meaning essentially you are probably in manufacturing, or you are in energy, or you're in agro-processing, and in one of the fields that really are eligible for these tax incentives. When we talk about priority sectors, really we are talking about sectors that include manufacturing, we are talking about energy, we are talking about construction, and we are also talking about ICT, we are also talking about water supply. But there is a detail in all of that. So it's not that when you are in ICT, you are getting these tax incentives and it's a blanket incentive that you will get. So you will have to be in very specific sectors, like for example, if you're building a data center. If you are in construction, there is also detail there. So you would probably be expected to be investing in something that is essential. What do I mean by essential? You'll be investing probably in an education facility or in a health facility. So there is more detail that is listed in the Act. Yeah. So for you to understand where these incentives apply, you are welcome to go through our Investment, Trade and Business Development Act. And also for you to be able to understand how these incentives apply with reference to the priority sectors, you may refer to SI number 47. Yeah, thank you.
Thank you so much. I would like to just get from the advisory perspective, Mr. Kennedy. When you look at the incentive framework that we have in the country, I think there have been growing concern to say, there are instances or maybe key sectors where we haven't really achieved some of the, resources that we give away, for instance. So from where you stand and the experiences that you have had, what are some of the inefficiencies that you see in our framework, and how can we really address that to deliver the economic development that we want to deliver for our people?
Yeah, thank you, Emmanuel. Maybe before I talk about the specific inefficiencies, maybe I can briefly go through what might be considered as the international best practice in terms of setting tax incentives policy. And for that, I'll use the recently released report by the an initiative which was set up by the IMF, World Bank, UN, and the OECD, where they released what they called principles on tax incentives. Basically, they set out 6 principles. The first one is justification. The second one is design. The third one is international consideration. The fourth is registration. The fifth is implementation. Then the sixth is the evaluation. On justification, what they basically say is that tax incentives are not there to just make an investor rich.
Yeah.
They are there also to benefit the country.
Yeah.
So the country has to focus on social benefits.
Yeah.
What are the social benefits that you want to derive from the tax incentives? And the idea is that the social benefit that the country intends to achieve must outweigh the social costs. What are we talking about social benefits? Social benefits will mean things like creation of employment, development of rural areas, areas that are maybe underdeveloped, or maybe just improving the security of the country. But all social benefits that the country is expected to come should outweigh the social costs. Social costs, of course, will include the revenue loss and maybe the damage to the environment and the like. So your social benefits must outweigh the social costs. That's basically the justification. So when you look at Zambia, for example, we have incentives that are given, which you might doubt whether really they can be justified. Maybe a quick example could be, in 2021, the minister announced to say manufacturers of ceramic tiles, I think, they will be exempt from tax for 2022 and 2023. So when you look at that incentive which was introduced in 2021 and is effective in 2020, for 2 years they will be exempt. Now you wonder which an investor can come in or how many investors can come in within a year, set up an industry and give you results that will be beneficial. So you find that if you look at this, technically, you look at that incentive could be targeted for one person who is already existing. If you target for one person existing, then it cannot have a good multiplier effect because the economists will tell you that sometimes you need to rely on the scale of numbers. If one employer is employing 100 people, it's not good enough. At least you need about 1,000 or so. So you can't have a policy which just kicks in, 2 years, they exempt it. It's just giving one person. Okay. The next principle is design. Design, I think the principle is that the tax incentives should be targeted again towards the social benefits that you want to derive. They must also have sunset clauses, not indefinite muyayaya kind of incentives. You may not realize that. And also what is recommended is that cost-based tax incentives are preferred to profit-based. Again, when you look to Zambia, you'll find that most of our tax incentives are profit-based. So on that principle, then to a large extent, we might fail. We might fail the test. The next principle is the international consideration. I think Gary mentioned that yesterday, maybe in passing. But as a country, we have international commitments that we also have to abide by. But beyond that, the recommendation is that the countries should not look at what benefits themselves exclusively. They also have to work towards mutual beneficial objectives, so that you don't compete with Zimbabwe. Just because Zimbabwe has tax holidays for 10 years, then you say, me, I'm going to do for 15 years. Then you are ending up both losing or what they call having a race to the bottom. So you must look at times what could be beneficial in terms of countries, rather than competing all the time. But the second thing about international considerations is that you have to look at the tax rules of other countries. Yesterday we mentioned about the global minimum tax. There are also rules like CFC, controlled foreign corporations, where at times countries have rules that can outreach, that can tax profits from arising from the company that they think they own from another country.
Yeah.
So the taxes that you might forego in Zambia could be taxed by another country in Europe or US. You think you are giving the investor, but actually the investor is not enjoying that benefit. Instead of an investor enjoying the benefit, the other country will say, you were undertaxed in Zambia, so we will tax you. So the money you forego has actually gone and benefited another treasury in another country. Okay. The fourth thing is the registration. The legislation, the recommended practice that the legislation should be driven by the Minister of Finance, should have at least have an opinion or approval of the Minister of Finance. It must be falling under specific tax laws. That, for Zambia, I think we can say is a quenyu. We have largely done that. Before 2012, our tax incentives were scattered. Sorry about that. Our tax incentives were scattered. Some of them were in the ZDA Act. But after 2012, really, our tax incentives have been consolidated in the various tax legislation. So I think there we can say it's a plus. Registration, implementation. The recommendation that the implementation of tax incentives should be done by the tax authority, and that the entities that are enjoying tax incentives should not be left entirely to say you are on tax holiday, then you are not being monitored. Okay? If you do that, then they might end up accumulating so many losses. By the time you want to tax them when the tax holiday ends, you have so many losses that they continue actually being on tax holiday. So the recommendation that you should, the compliance measures should not really be relaxed just because someone is enjoying tax incentives. And there again, we can say it's maybe a plus for us. The tax administration, the tax incentives are administered by the tax authority. Compliance is still being required. They are still required to submit return, and sometimes they can even be audited. So that part is there. The sixth and final thing is evaluation. Evaluation. So first on justification, there's pre-investment assessment. You assess to say, are we going to have social benefits which are good enough for us to give that assessment? You say yes. But at the end also, now that investment has come, now you do ex post assessment to say, how has this investment actually performed? And most of the time, you do that by producing tax expenditure statements to say, what has actually this tax incentives cost us? Okay, and again on that aspect, we can give Zambia a plus because for the first time, last year, December, they released the first tax expenditure statement. And we are hoping with that they will continue. And maybe the only thing that I didn't see in that cost expenditure statement is that it doesn't say so much about who has benefited. It's in a way for transparency and good governance. The tax expenditure statement would actually be showing who are the beneficiaries and how are they benefiting.
Okay, well, okay. On that thought, I would like to just find out from you how we can really, because you highlighted one aspect where we sometimes focus on the short to medium term and offer incentives to really address specific sectors or maybe an investment that is has come into the country or has been in operation. I just want, because the argument that they would give us from the public sector side or from the private sector where I'm coming from is that government will give an incentive to unlock a specific sector. If you, for instance, they give for 2 years, maybe they're trying to grow that sector, and because they have seen potential in that sector. So with the argument that you have given and us really focusing on the short to medium term, maybe what is your argument when the state or the private sector enterprise ourselves say we want incentives to unlock, deliver this kind of growth, and if it's taxation side, we want to add this and that, those numbers to the treasury. So what is your argument when you are, presented with that perspective?
I mean, in principle, there is nothing wrong with that approach. Investors asking for tax incentives, but what the government will be doing Mr. Castaldo, the best person to answer that question. But what the government should be doing is that to say, okay, you are promising to invest so much to unlock this industry, but what is there for the government? Because if someone's going to say, I'm going to invest in Shangombo, while I invest in that, I'm going to do a road going to that area. Okay, then for the government, it's a price. So the government will look at, the investor is going to do a road to Shangom. We don't have a road. We have failed to do a road in 20 years, okay? Beyond that, the investor is going to employ 100 or 1,000 people. Also, it's a price. So for the government, each one on the deal looks at what is there in it. The government is not there to just give manna from heaven to the investor. The government will be looking at what does it give to our people, what does it mean to the government, and so those are the social benefits that it weighs against what they will lose. The government will obviously looking at, we are losing a tax. Maybe when you're doing the road, you're going to mining industry are going to cause so much damage to the environment that after that we're going to start, the government will come in and incur the cost. So that is what they'll be considering. You are offering this, but after that you're going to leave us with more debt. So that's all.
Okay, just to quickly run to Dr. Phiri. I think Mr. has highlighted some of the key issues that I feel we need to amplify from your research perspective, and in terms of the areas of work that you have done in this space, and from ZIPAR's point of view as well, looking at the limited fiscal space that we have, and vis-a-vis the incentives that we have been given. For instance, in the mining sector, in the energy sector, we had power issues, but there are so many incentives and policy measures that have been put in place. So when you look at the job creation side, are we really hitting the target and also the growth margins that we are posting as a country? What is the issue there? Are we really, achieving the intended goal from where you stand as research expert?
Yeah, so I think on the tax space and also incentives, I think it's key for you to figure out to what extent do government or private sector play a role. I think in terms of the objective of tax, like what my colleague did mention, those were quite clear, but what one has to understand that government only taxes mainly to gain some revenue to institute its activities, but also most importantly to influence economic activity. So I think there's also the aspect of the multiplier effect. But prior to that, I would also have to say that there's been several studies in terms of the effect of tax incentives on an economy and on developing countries in general. I think World Bank did a study in the early 2010 where they did argue that the benefits for tax incentives were not widespread and noticeable, for example, in the case of Zambia. But if you look at the studies that have been done in Rwanda, you could see that the tax incentives have actually benefited the economy as a whole. So I think the area that one has to address is to enhance the benefits of the multiplier effect. So I think what comes out of tax incentives, if everything is prudently and correctly done, is perhaps if the taxes are lowered, the investors are likely perhaps to employ more people. And when they employ more people, those people are going to have some source of income which will still be able to use to invest and to consume, and that has an effect on the aggregate demand in terms of the Keynesian model and economy as a whole. So I think in terms of tax incentives, the ideas have been good. I think in the earlier years before 2015, 2020, things were worse off in Zambia, but I think over the last couple of years, I think the benefits have been noticeable in certain instances here and there. But I think what we need to do as a country is we need to make sure that there's enough checks and balances to ensure that those people who are given tax holidays, for example, like was the case in the past, are still able to invest in the country and are also able to be compliant and perhaps even stay beyond the tax holiday period. Because what studies have also shown is if you give a company a 5-year holiday period, what then happens after 5 years? Can they just close, liquidate and leave, or will there be a mechanism that compels them to stay in the country to ensure that they continue investing? I think he raised a very good point about having corporate social responsibilities. So for example, if there is a mine in an area, are they going to ensure that the water is clean? Are they going to ensure that they help build up a schools? That isn't the fiscal burden on government, and then there's a win-win in terms of the benefit to be felt in an economy. So I think tax incentives in their whole, they're quite a good idea because they're there to stimulate investment. And when investment grows, there's a lot of economic activity, there's a lot of employment, and then there's spillover effects benefit you and I because we have jobs, and the government still has a larger broader tax base, and then they're able to institute other policies. I think the problem that needs to be addressed is how then do we ensure that incentives are targeted to specific industries. I think you raised the point about incentives targeting a specific industry. I think what you need to understand is there's what we call quick wins. So like right now, as a country, we have the energy crisis, where ZESCO does not have financial muscle, does not have capacity to supply electricity to the entire country. So if the government gives an incentive to a power generation institution for the next 3 years to ensure that they're able to supply power, that means industry is going to have more than 5 hours of electricity, they'll produce more, and then everyone benefits. So in the short term, we need to identify the quick wins, and then of course in the long term, we need to identify what benefits the economy beyond the 5-year period or beyond the quick wins that are being set up. So generally tax incentives, depending on how they are targeted and also the industry that they are targeting, they could be beneficial. But I think what is important is prudent monitoring and ensuring that the benefits beyond the tax incentives are realized, not only for the institution, but for the economy as a whole.
Okay. On that thought, I think there have been arguments to say, and also when you look at what my sister highlighted on in terms of the incentives under the ZDA Act, and also other incentives, for instance, that maybe the missiles are likely to put forward, there have been growing concern to say, some of the incentives really, they target multinationals, but what do we do for the MSMEs? Remember, the Zambian economy is 90% SMEs, but do we do so much to really support that critical sector of the economy? What are some of the things can you point at or highlight that will really, provide that relief to our small players in terms of incentives for them to really grow, access affordable financing, and also reinvest in their production processes? What are some of those issues that you think, from where you stand, are very important?
All right. So I think the challenge that we need to ask ourselves is, I think what policymakers need to do is the aspect of benchmarking. I think more often than not, we just think about tax incentives, put them across, and really don't follow where they've worked and where they've not worked. I think there are other countries where industry-specific incentives have worked, like for example in the UK and in Spain, and also SME-specific reliefs have also worked in Belgium. And I think South Africa also had similar incentives when they were hosting the World Cup in 2010. Yeah. So I think we need to understand as a government or perhaps as an economy to say what incentives are key for multinationals and what measures are key to ensure that they comply and the benefits trickle down to the economy. But I think what is key, and I think over the past 2 years there's been progress, much earlier it was much worse, but I think what is key is we need to identify the industries which give us, for example, quick wins to say, the mining, for example, the artisanal mining, maybe the agricultural sector, and maybe, for example, the manufacturing sector. I think we need to be more specific and more elaborate. I think the challenge that is there in terms of tax incentives, you need to determine whether an incentive is blanket and cutting across, or maybe it could be tailored to align to a specific industry. So it is possible, for example, to have a specific incentives. For example, I think recently there's been incentives on agricultural exports. But it's not always that those incentives must cut across. So maybe government might need to draw the umbrella and determine what incentives are key for multinationals and what incentives are key for smaller and medium-scale businesses. But one thing we need to acknowledge is perhaps we can also borrow from what has worked from the bigger industries to see how we can emulate it to trickle down to the smaller businesses. Sometimes it takes time, but also sometimes I think we need an involvement of tax experts in this space, because I think that's also where the challenge is, where we also don't offer our technical will to ensure that the policies are more specific and more beneficial. So I think you can have a holistic approach. I think they will be working and they'll be more targeted and the benefits will be more pronounced.
But thank you so much for that. Mr. Nondo, from where you're coming from, the policy side, there have been growing arguments. For instance, this year, there were some, adjustments in terms of some tax measures that were put forward. The private sector just woke up to some of the, in the mining sector, for instance, there was some adjustment, 15% on export and the like. And I think the second quarter also there was some adjustment to try and finance supplementary budget. And the argument that was given is that we need to ramp up domestic resource mobilization, and that is coming from the fact that there was a budget which was presented, and of course there could be some of the incentives and issues around that. And really the question is, when you look at all those dynamics where we just come back in the new year, there is more adjustment, second quarter, third quarter, there is more adjustment. The question that really people ask is that, do we even plan or have a tool to understand the incentives that we put forward, the implication, and how we're going to cover up the revenue loss. So from the ministry's point of view, what are some of the models do you use to really focus the revenue loss? And also, in case there is productivity, how well do we recover that? Not just looking at the job creation side, but also overall contributing to the treasury and the national budget.
All right, thank you so much. Maybe before I proceed to answer the question, you can allow me to just make a few comments on what has been said so far.
Yeah.
When you look at the tax incentives, we have, like it has been indicated, we have a legal framework that is under the Zambia Development Agency,
Indeed.
which has prescribed the parameters with which are supposed to be considered before you grant. So with regards to the parameters, the law is very clear that if someone is going to come and access the incentives under ZDA, they are supposed to create employment. So with the creation of employment, when they are making the applications, because normally how the process works, the law provides that the Director General of the Zambia Development Agency recommends to the Minister of Finance.
Yeah.
So when they are now recommending to the Minister of Finance, they are supposed to provide us the information relating to how many jobs will be created. Then they are supposed to tell us how much they are going to invest. And also one of the key requirements that we have is that the investors are supposed to transfer technology to the Zambians. So we use the information that they provide to make follow-ups with them. The Zambia Development Agency runs what they call the aftercare, where we normally do joint operations with them,
Yeah.
where we go to follow up to see how many jobs we are created. So the incentives under the ZDA, they've got a time frame of 5 years.
Yeah.
So within the 5 years, we ask the investor to give us a breakdown of how many jobs will be created in each and every year,
Yeah.
and how much investments will be created, how much will be invested in each and every year. So when we are following up with them, we go to tell them, no, you told us we're going to create 100 jobs. How many have you done? So if they've done maybe, let's say 80, they will need to provide an explanation as to why they haven't created the 20.
Yeah.
So we have a framework in place. So even when looking at the targeting of the incentives, it's not that the incentives are just all over. They are targeted. To start with, when you go to the Zambia Development Agency, that is the Investment, Trade and Business Development Act, it itemizes 5 key priority sectors where the incentives are provided. So you have manufacturing, you have construction, you have power development, you have energy development, and you also have information and communication and technology. So these are the 5 priority sectors that we operate with. And when you narrow down to manufacturing, for manufacturing, there is a definition that has been provided by the law where you are trying to add value and also do the assembly. So even when you try to look at how those incentives are crafted in the law, that is the customs and the value-added tax, they are very specific. If you are going to do assembly, assembly is going to relate to motor vehicles, trailers. So by looking at that, you understand that the incentives are well targeted. When you talk about construction, the SI 47, that is the priority sector declaration order, itemizes what is supposed to be constructed. It's not that you're supposed to construct everything. You are supposed to construct education facilities, you're supposed to construct health facilities. So by so doing, we've done all that to ensure that our incentives are well targeted, so that at the end of the day, when you provide the incentive, you are able to allude to the benefit that has been created. Even for energy development is going to relate to the construction of a filling station, even construction of a power plant. So all that is in the quest to ensure that we know who we are giving the incentives and they are well targeted.
Yeah.
Just to provide a few comments on that. Coming back to the question of the models that we use. First of all, you need to understand that we have 2 kinds of incentives that we have. We have the incentives that are administered under the Zambia Development Agency.
Yeah.
And we have the investment that are the incentives that are prescribed by the Minister of Finance based on the legal framework, the power that he has been given. So when you read Article 198, that requires that the tax should be prescribed. It also provides the authority person to whom the mandate has been given to waive taxes. So under the three taxes that we have, that is the customs and income tax, the customs and excise, as well as the income tax. Under the customs, you have Section 89 specifically that gives the minister the power to waive taxes. So the minister can waive taxes to stimulate economic activity, and under the income tax, that should be Section 15, and also the value-added tax that should be Section 15 and 15A that allows for that. So those are the procedures that the minister uses to try to provide some of these incentives. So when you go to the value-added tax, you're going to find them under the rating order, you're going to find them under the exemption order. Yeah, so we have the incentives that are administered by the ZDA, and there are those that are prescribed directly by the minister, depending on the situation. So like everyone has alluded to, some of these incentives that are being discussed, where we're talking about 3 years and stuff like that, they come as, and like we normally, one thing that is very interesting is that you discover that most of these proposals, they come from you. You are the one that come to us. You tell us, no, you need to do this, and you are supposed to do this. So we normally do this through a consultative process, depending on the need that you have identified. Yeah, so that's how we usually go about. So with regards to the models, we use what we call the revenue foregone technique to try to estimate the revenue loss that is going to arise from the provision of the tax incentives. So when you look at the revenue foregone technique, what we just try to do, we just try to look at how much revenue we are going to lose as a result of implementing that particular measure or that is an incentive. So what we try to do is we try to look at the trend analysis of how much taxes we've been collecting over a long period of time, and so in an event that probably maybe if you're requesting for the suspension of that particular tax, that is if you're suspending in totality, if the tax rate was 20 then you want to go to 0, we are going to look at the trends and assume how much we were going to collect if that tax existed, and then you try to compare with what is going to come to when you bring it down to 0. So that's a technique that we normally use, and that technique can be used to do the estimates for the medium term and also for the long term.
Indeed.
That is the major measurement tool that we use.
Thank you so much for that perspective. ZD, just under 1 minute, I just want you to, if we have data that shows the number of companies that are enjoying the incentives under the ZDA Act, and also just your final remarks on the incentive framework in Zambia, just under a minute.
Okay, so that's a very interesting question, because I think the assumption is usually that everybody who is investing is getting an incentive somehow.
Indeed, yeah.
So we will need to contextualize it. So the investment incentives are twofold. So there's non-fiscal incentives, and there's also the fiscal incentives.
Yeah.
So then the fiscal incentives will be the taxes that we are talking about. And there'll be also the non-fiscal incentives, which will be the facilitatory support that we offer as an agency. So in responding to your question, I'll just give an estimate of the number of companies that we have on our database right now, currently, who are enjoying investment incentives that are offered through the ZDA. That is away from the ones that are enjoying other incentives that are sitting outside of the ZDA, of the ITBD Act. So those will be given incentives at the discretion of the Minister of Finance. So the ones that are enjoying incentives currently from the ZDA registration that we have right now, are plus or minus 150 companies. Okay. So we can have companies that will come and register and get a certificate of registration, but it does not automatically imply that they will actually get those incentives, because we need to recommend to the Minister of Finance. Okay. And these companies that I'm talking about are the ones that have been recommended to the Minister of Finance and have actually been approved by the Ministry of Finance. Okay. The others may be the ones that are probably in the process of trying to set up and demonstrate what the ministry has spoken about. There's a criteria that they are supposed to meet. Yeah. How many jobs have they created? Yeah. Are they actually coming in to set up? So, for example, if they are going to benefit from what was earlier alluded to, I will take the conversation back a little bit. The incentives that we are basically offering, if we talk about what was earlier mentioned, the cost-based incentives, we'll be talking about the accelerated depreciation and the duty-free exemption of capital equipment. So it doesn't mean that if I come in and I say I'm going to set up a plant manufacturing, say, tiles, it does not automatically mean that I will be able to bring in my capital equipment duty-free. I will have to be recommended by the ZDA. So, and then also, when I begin to get...
Maybe just under 10 seconds. Yeah.
Yes. So basically, what we are trying to say is, it does not automatically mean that just as long as you've come and you've invested, then you're not benefiting.
Indeed.
But the other thing that I would like to say in addition to what has already been said is, when it comes to SMEs in Zambia, we have a very loose definition of what we call an SME. In Zambia, mostly what we are calling an SME is a micro business. So if we want somebody to benefit from incentives, the law actually prescribes for SMEs to get incentives. But these SMEs must come and register, and they must demonstrate that they have invested a minimum of $50,000, because that demonstrates that they have put in a significant amount and they are a growth-oriented enterprise. So then they will be able to benefit from these tax incentives. So it's not that there are no incentives for SMEs. Perhaps the discussion would have to be for another day, but we see very few Zambians who've invested $50,000 coming in. So it would be very difficult to give a statistic in that particular area. Thank you
so much. Dr. P, just under 10 seconds, your final reflection in terms of the incentive environment in Zambia.
All right, I think all I would just say is that both the private sector, the government, and NGO have a role to play in terms of moral suasion and responsibility. But also just one comment that I'll mention, I think the concept called the Regadian equivalence. So what you have to know is that we can have incentives now and then maybe suffer later or vice versa. So normally the incentives probably could put government at a disadvantage, but ultimately the long-term benefits are for the benefits of the economy. And if you do the reverse, you will have short-term benefits, and then it comes with consequences. I think my colleagues from the ministry did mention that, of course, measures are put in place, calculations are put in place. So I think all I would just say is, let's support this aspect by complying for required to pay tax, but also let government policies and taxes be directed to not only the benefit of the right industries, but also to ensure that it trickles down to the masses and subsequently contributes to economic growth. Maybe just my final remarks on the Indaba in itself is I think this is a good platform. Maybe it could have been done much earlier so that they could have been captured, whatever recommendations we put across in today's budget, but probably it's late. But just a thought for the future. Thank you.
Thank you. Mr. Kennedy, your final remarks.
Yeah, I think maybe what I can comment is on the policies themselves, how they can help address some of the things, like he mentioned about companies leaving after the expiry of the tax period. Most of the time we find that the government will say we want to attract him. Giving this tax holiday was want to attract investment. So they will give a tax holiday on the profits, and then they will exempt the dividends. What you are doing is that you are not getting corporate tax, but you are also exempting dividends. Essentially, what you are doing by exempting dividends is that you are actually enticing the company to distribute. So if you are distributing, then you are not actually maintaining the capital that you intended to keep in the country. So if you are multiplicity of tax interest, you end up losing. So if you exempt the profits, at least tax the dividends. So that if the company is going to leave at the end of the year when they cross it, we have a very wide definition of dividends in the Act. Some of the distribution that we made when they want to run away, because they might end up being taxed as dividends. So the multiplicity also sometimes doesn't work well for us.
Thank you. From the minister's point of view, are you going to continue giving the private sector incentives?
All right, okay. Just to comment on the income tax scenario here. So you understand that, like it was clarified, the income tax incentives that we have, it relates to exports. So the whole idea of having the income tax holiday on the exports is we also, there are many things that we are trying to work on as government. We are also trying to stabilize our foreign exchange market. Okay. To understand that we can only get, like the forex when we trade with our partners, and also I understand that we can also do the import substitution locally, where our country is able to produce the goods that we need, so that probably at some point, if the Zambians would want to consume something that is locally produced, then there would be no need for them to buy from there. So when we try to give this was just meant to encourage the export, so that at least we're able to end the foreign exchange. But we remain cognizant of the fact that, of course, we understand that when you give out the tax holiday, then someone is going to be taxing elsewhere. That is well understood, but also we just need to look at the bigger picture of where we want to be and what we want to do. So I think it's something that this discussion is something that we can rediscuss. I think that's why you and me exist. We are always, the Ministry of Finance operates a open door policy where you can come through and discuss some of these issues, so that at least we try to put everything in correct perspective, and we do things so that at least at the end of the day, it makes the country go forward. With respect to giving of incentives, usually the need comes from you. Probably no, we are not the experts in everything. Of course, we try to interact with all the industries here and there, but at least some of these needs, they come as and when we need to do something. So I think the giving of tax incentives will depend on the conversation that we have and the need for us to try to stimulate different sectors of the economy. So I cannot say we will stop, because we have
Definitely.
the economy to grow.
Definitely.
So I think it's an ongoing conversation that we need to have. But of course, if you look at what we've been trying to do, in the recent past, we've been trying to rationalize the incentives.
Yeah.
So even in the media budget, you discover that there were some incentives that were gotten rid of. So I think it's an ongoing conversation.
Thank you so much. I could tell that the MC is on us. It has been a very productive discussion, and from where we are, I'm coming from personally, the Zambia Chamber of Commerce and Industry. Sometimes we compare over even a 70-page document asking for specific relief measures from the ministry and incentives. So this has been quite productive, and we are aware that for us to really unlock key economic sectors, we need the private sector. But for the private sector to really participate, they need a conducive environment. They need a lowered cost of doing business. And one avenue that government uses is through provision of incentives. So thank you so much. And if you have any other questions, I think there is a session for questions. It has been very productive. Thank you.